Hey guys, what's going on? Welcome. So we're gonna do a couple things today, and I just wanted to start off by these videos that I'm going to do, these recordings, and show people exactly what's going on. Yes, and a lot of you have been asking, what is Forex? What have we been doing? And you know what? I'm gonna deliver today. So let's get started. You guys gonna see a couple things, couple new things, but we'll see how it goes. So here we are, guys, and my name is Tranel Ghany. I have been trading forex for oof, well over 2 years, and I think it has been a wonderful experience thus far. I have seen some gains, I have seen some good times, I have seen some bad. I have learned a lot of lessons. I have learned a lot about myself. I learned about my emotions. I learned so many other things. But it has all been good. My wife and I have been enjoying ourselves, and we had to move on. Basically, we were trading manually, and we had to move away from trading manually to using something that could give us some easier times because we had our first baby. God bless him. He is 10 months now, and it really took a toll on our time management skills, and we had to find something that could help us and make our trading experience easier. So we'll get into all that. But right now, we're going to go through a couple of little things. So here we go. First of all, we need to show you guys. So what is Forex? So Forex basically, um, for those of you who don't know, it's foreign exchange. Forex is foreign exchange, FX trading, if you want to call it that. It's really the conversion of one currency into another. Um, and it's probably like the most active trading market in the world. More than $5.3 trillion is traded daily. And what does that mean? That means there are all the countries that have, let's see, Forex. So you guys can come to tradingview.com and you guys can see what I'm speaking of. So all these are all Forex pairs, as you guys can see here, all of these. Some are called majors, some are called minors, some are called crosses, whatever they may be. And let's see, we'll use the euro. Oh, sorry, let's not use the euro. Let's use USDPY, which is US dollar to the Japanese yen. And I will use this to do my illustrations for you all. So, Forex trading. If you ever have traded Forex, and if you ever changed money your local currency, to something else, you would have participated in Forex. So basically, you would have, let's say, you get a $1 US is equal to 10 of your currency, whatever it may be, right? Now, you take that money and you walk out the bank. So you take your dollar and you walk out the bank. You said, here what? I don't want this dollar anymore. I prefer to have my $10 to go and purchase something to eat. So you walk back in the bank all of 1 minute and you hand the teller your $1 US and said, I would like to get back my $10. Guess what? You will not get back $10. More than likely, you will get back less because there is something called a buying and a selling rate. And the difference between the prices is where the banks make their money. So you will probably get back, let's say the rate is $9. So you give $10, you get $1. You give back your dollar and you get $9 because that's how it works. So basically, being a forex trader you will cut all that out and do exactly what the bank does, just personally. Yeah, good. So Forex is really the buying and selling of a currency. So who does this? Banks, central banks, corporations, investors, individual traders like myself, and some of you who are probably looking and listening to this. Um, People all over the world. It doesn't matter where you are. Probably some countries, and it's mainly because people travel, so you need the local currency, or you do international trade. You have to purchase goods or pay for services, so you need to change money, and this happens every day, Monday to Friday, and it works. Different time frames, as you guys can see here, we are probably on a daily time frame. It works on different time frames, whatever you want to do. You could use several different indicators and strategies, all million of them. And there are so many strategies, so many indicators that you can use to make your trading experiences easier. All of these come and you have to do analysis, whether it's technical analysis, fundamental analysis, whatever you want to do to get in and out of the market. So basically, you could flip a coin and say, here, what? I am going to enter a buy, I'm going to enter a trade, a sell, and wherever it is. So if some of you will probably be watching this and thinking, yeah, I'm a cool trader, I know what's going on, I'm probably drawing a line here, something like that. And some of you will say, hey, you know, I need 3 points, I'll probably do this. And that's a trend line. Right now, the market is trending. There's a support and resistance zone right here. And you would do all these fancy things and then here, there's a touch here, there's a touch here, here, there, all this. And you're saying, you know what, this looks like a really good support and resistance zone. So let me wait and see what's going to happen, do some Fibonacci ratios, and all of this would probably help you to get in and out of the market. Yes, for those of you who are trading, so this will probably help you. You'll do some analysis and say, yeah, okay, it's cool. It's trending. It's respecting this here. The impulse is this. The retracement is this. And yeah, so this market is going to sell whatever it gets to be. It's going to buy. It's going to sell to this level. It's going to sell to that level. And you do what you need to do. Yeah. So I was just doing a quick illustration. This really was just an illustration. So basically, the market is buying and selling every day. Some days more than some, whatever it is, it will move. So basically, you need to get in and get out, and you enter buy, enter sell using your different indicators, and you will do your charts and choose whichever pair that you want to choose, and you will make your money. Yeah, and that's how it works. It's all about buying and selling, putting in a stop loss, putting in a take profit, and getting out in and out of the market and accumulating your funds. And hopefully you'll understand what is compounding your money. And you could build, yeah, you could build from there. So yes, Forex trading is pretty easy. It's pretty easy because it's so easy. It's around the clock. It's 24 hours. There's always some session, some bank somewhere that's now opening, some is closing. There's always a cross between banks like the Euro market and the US market, the Asian market. There's some bank somewhere always open 24 hours and 5 days a week. So it is pretty easy. However, it's also pretty easy to lose your money. With that being said, I must say that the ratio of, well, not the ratio, a percentage of Forex traders that lose their money is probably like 96%. 96% of manual traders lose their money. Why? Why? That's it. And the most basic idea of why people lose their money is discipline. They don't have discipline. They don't understand how to work things out, and they do emotional trading. They don't have the discipline to say, here, what I need to cut this out, I need to get in. Some people, yes, do trade better when they're emotionally stressed, but at the end of the day, it will take a lot more out of you if you enter the market. Emotional trading does not work, and it's really about 70% of your mind and your mindset will work in this. And if you can't get that right, then you're already setting yourself up for major failure, right? And that's mostly it, because once you could have discipline to get in and out of the market, you will be fine, whether you're using price action or whatever it is. But everyone gets a little greedy. Not everyone. Most people get greedy when they realize, hey, I can do this, I can make more, and then guess what? Boom. Stop loss, stop loss, stop loss, stop loss. And you're losing your money and you don't know why. And you're trying to make up for losses. And you're going to end up in a really bad state because you're not sticking to your trading plan, or you don't have one, you don't know how to create one. You don't set a stop loss because you know, and I quote this, you know that the market is going to reach there and turn. I know it's going to go in a sell. I know it's going to go in a buy. It's going up. It's going down. I know. And that's what you do. And you don't have a stop loss. And you said, yes, I'm going to ride this because it's going to go all the way up. I'm going to get 1,000, 1,500 pips. And it doesn't happen. And you blow your account. You risk more than you should, which is really like you should be risking like 2% per single trade of your account. And you don't, because there you go again saying to yourself, you know what's going on, everything is good. I draw my charts, I know what's going on. I'm listening to the news, I'm looking at it, I'm doing everything that I'm supposed to do, and the market decides to go the opposite way. You don't keep your emotions in check. You need to separate that if you want to become a manual trader, and you cannot compensate for losses. So you lose 2%, 3%, 5% today, and then you decide, here what, I gonna make up that for that tomorrow. Or I'm gonna trade when markets are closed, and you do all this sort of nonsense and you figure that you could catch up. But guess what? So many have done it before, and so many will continue to do it. It takes a lot of discipline to get things sorted out. So this is what it looks like. All these are buying and selling candles. Green is buying, red is selling, and this is a 1-day chart. I don't have any indicators on it, and some people would say, yep, this market is trending up on a day chart, and this is a channel and something like that, because this is how the market operates. You know what's going to happen. Probably do something like that and say, yeah, cool, this market is going to buy, it's going to reach here, it's going to, because of this zone. And you're probably going to do something like this. Say, yeah, right somewhere here. It's a zone, so market will probably be moving in that and whatever have you. Say, yeah, this is a good zone. It has been a resistance zone for the longest while, and now it's back here. So basically, whether it's breakout, retest, whatever you're doing, Elliot's wave. It takes a lot of time to trade Forex. But if you could do it, kudos to you. If you can't, and you don't have all that time, things are changing in your life, you need something that to work, well, there is something you guys could probably go on to. This is my wife's name, Deandra. Economy is what we're going to use. I'll be releasing some more videos and explaining what's happening here and why we are seeing success now and how we are moving forward with our lives and how we are setting up our child for success. So you guys can see economy offers a lot of things, a lot of tools that can help you with your trading. So I'll be doing those and helping out. So I think that I have a couple more minutes, 16 minutes. So let me see if I can do this. If you guys want to see what a trading plan looks like, so I'll help you guys. So let's see. The initial deposit, this is what it will look like. Sheet one. If you are monthly paid and your average is like 20,000 a month, tax 25%, this is what your gross, and you would have probably paid about $60,000 in tax for a year, right? And after tax, you would have probably end up with 180,000, yeah, with $20,000. But let's go. So I did these projections, 3% and 5% growth. With $1,500 after a year, it'd probably be about 5,000, right? So that's going strictly 3%. It could be more, it could be less. That's how it goes. And 5% with 1,500, it could be around about 10,000. So you guys could see what's going on there, right? And we can do this over and over and go through all different amounts, 3%, 5%, whatever. That's being conservative. And but these are just projections and understanding how to compound money, how to grow money. I mean, $20,000, 3% growth per week. I mean, that is $65,000 in a year. Who doesn't like that? But you need to understand that there's risk involved. It's Forex. You could probably lose the shoe that you're wearing trading Forex. You could lose everything trading Forex. Although there's a stop loss with your broker. And that's how it works. You need to understand that there's risk involved, and if you want to start trading, you need to understand how to use the manual system, how to get in, what are risk involved, how to compound, how to create a chart like this to stick to daily or weekly or monthly or whatever you need to do, and understand that there is a lot of potential, but it takes a lot of work. It is not get rich overnight. You can make some money, but it takes work. Yes, guys. So this is me, Tranel Ghany, once again. You could probably get me on Instagram, Facebook, and YouTube, which I'll be posting videos and I'll be sharing a lot of things. It may not only be Forex, but it will be several other things. So love you all. This is Ghany's Theory. Thanks for looking and staying in touch. Love you all. Bye.